Hi everyone, we've just completed PPE chapter 4 and we covered the revision of cost related to PPE, the depreciation methods as well as the disclosure of PPE. We also looked at new concepts such as what happens when you are upgrading PPE or exchanging PPE and how to account for component accounting in PPE. In this video, we'll look at question 4.8, specifically part B and part C. Remember, first attempt this question before watching this video. So if you haven't done question 4.8, please stop the video now and try doing question 4.8 without looking at the solution to get the most benefit from watching this video. Now that you've done question 4.8, I hope you have applied the specific technique to answering any PPE question, and that is, firstly, stick to the time. The PPE questions that we'll look at take quite a lot of time to complete, so there are many calculations to do and you need to do it in the quickest amount of time. If you find yourself struggling to calculate specific depreciation amount or closing balance amount, try moving on to something a little more easier, because you need to focus on getting your easy marks first, and that's the second point. You need to get as many marks in the required amount of time. So if you find something that's quite tricky and you're struggling with it, you need to force yourself to move on so that you can ensure you get the other marks in the question. And then lastly, you need to use timelines. With any PPE question, there's always a lot going on. You are acquiring different assets, you are also disposing of assets, and you need to keep track of your timeline. So let's look at question 4.8. You are required in part B to show the journal entries for the transaction on purchasing the tumble dryer and dry cleaning machine in notes 3, 4 and 6. What's important to note is that we are only looking at the journal entries for the purchasing transactions. So let's look at note 3. In note 3, there was an exchange of assets, so this would classify as a purchase of assets. In note 4, there was no purchase. We are simply given more information to help us calculate the depreciation. And in note 6, there's an upgrade, which also is accounted for as a purchase transaction. So what are the journal entries that are required? In note 3, we are told that we are exchanging 2 washing machines for 1 new dry cleaning machine. With any exchange, whether similar or dissimilar, we need to de-recognize our asset. To de-recognize our asset, we would post the following journals. We'd credit the cost of our asset, which is exchanged, and debit the accumulated depreciation of that asset which we are exchanging. In this way, we de-recognize our asset. And then we need to recognize the asset that we received. In this example, was it a dissimilar asset or a similar asset? It's quite easy to see that we are exchanging or giving away a washing machine and we are getting a dry cleaning machine, which is a very different kind of asset. Yes, they both are used to clean clothes, but they are not similar in nature. We then, because it's a dissimilar asset, we need to value that asset at using our hierarchy. Number 1, the fair value of the washing machines given away. Or if we don't have that information, we need to recognize it at the fair value of the dry cleaning machine acquired, and if not given that information, the carrying amount of the washing machine given away. So looking at note 3, it is quite easy to see that we are not given the fair value of the washing machine, but in the last sentence of note 3, we are given the dry cleaning machine's fair value of 50,000. This becomes our cost. We debit dry cleaning machine by 50,000. But we are also given additional information saying that we also paid an additional 40,000 to complete this transaction. Lastly, because we are looking at a dissimilar asset, we need to recognize either a profit or a loss, as one of these could occur when dealing with dissimilar assets. In this case, we can see that we actually have a loss on exchange of assets. We are also given additional information regarding costs which were incurred to make the machine operational. These costs are listed and need to be categorized into costs that can be added to the cost of the dry cleaning machine, and those costs that need to be expensed. The delivery fee, the electrician installation, as well as the redesign of layout are all costs that are incurred to get the machine to a state where it can operate. The costs of chemicals and training are not related to getting the machine functioning, so these costs are simply expensed. We've already said that in note 4 that no journals should be processed regarding the purchasing of any PPE, but note 6 we recognized an upgrade. One tumble dryer was upgraded on the 31st of December with a motor to the value of 10,000. To recognize this upgrade, we'd simply debit tumble dryers with 10,000 and credit bank. So this completes part B. Let's look at part C. Part C, we are required to show the note for machinery and vehicles as it appears in the notes to the financial statement of Lenterbreeze on 30 June 2013. It's important to note that we only need to do this for machinery and vehicles, not equipment. Please read your required questions very carefully, as you don't want to be wasting time doing unnecessary work. So, this is what our structure for a note would look like. We'd have the columns for vehicles and machinery, and we'd have your carrying amount at the beginning of the year, any additions, disposals, and depreciation, and then you'd calculate your carrying amount at the end of the year. Looking at the question, we can easily get some marks by just inserting the information given to us. We were given the cost price of the vehicles. The Nissan Bucky was 156,000. We are also given the cost price of the machinery, which is the 85 and the 60,000 together makes the 145. And then we're also given the accumulated depreciation for machinery, which is the sum of the 40,000 and the 25,000, which gives us the 65,000. It's quite clear that we still need to calculate the accumulated depreciation for vehicles. So let's look at what we need to do. We have a Nissan Bucky, which was purchased on the 1st of the 1st, 2011, and its accumulated depreciation for a period of 1.5 years to the beginning of our current financial year. To calculate depreciation, we'd look at note 7 and we'd see that there are two components that make up the Nissan Bucky. We have the body and engine as well as the tires. To calculate the depreciation on the body and engine, we take the cost price less the residual value divided by the estimated useful life times by the number of years that we've had the Nissan Bucky, which is 1.5 years in this example. We do the same for tires, except there is no residual value, so we take the cost price divided by the estimated useful life of 2 years multiplied by 1.5 years that we've had it till the beginning of the year. Therefore, our accumulated depreciation at the beginning of the year amounts to 18,500. Now we're ready to move on. Let's look at additions and disposals related firstly to the Nissan Bucky and then to the machinery. Any additions to the Nissan Bucky? If we look at question note 8, we'll see that the Bucky was sent for a service on the 1st of July costing 1,400. Remember, a service cost or a maintenance cost is simply expensed and is not added to the cost of your PPE. But we are also told that the mechanics advised you to replace the tires. The cost of the 4 new tires are 7,000, and these tires were replaced. If I replace something, this is an addition. I've taken something out. In this case, I've taken the tires off and I've replaced it with new tires. That happened on the first day of the actual year, the 1st of the 7th, 2012. I replaced my tires with a cost of 7,000. In note 9, I'm also told that a decision was made to install a fiberglass canopy. This purchase was made on the 31st of August 2012 for a cost of 25,000 rand. So our additions for the year are the sum of the two, 32,000. But what's important to remember is when you replace something, you've taken the old and replaced it with something new. You need to de-recognize that old asset, and that de-recognition is done through disposing of it. We need to dispose of our old tires, the cost price of which was 6,000, and the accumulated depreciation till the date of disposal, if you remember on the previous slide, was 4,500. Therefore, our disposal for the year is 1,500. Next, we need to calculate our depreciation. Our depreciation is for the current year, and we can calculate that for the body and engine, the cost less the residual value of the estimated useful life for the entire year that we've had this body and engine. We've also had the tires, which was purchased on the first day of the year for a whole year, which is the cost of 7,000 over the estimated useful life of 2 years, gives me 3,500 in depreciation. And then lastly, I purchased the canopy during the year, the cost price of which was 25,000 with a residual value of 4,000 over an estimated useful life of 20 years. We are told that we purchased this canopy on the 31st of August. So if you count your months, it would be September, October, November, December, January, February, March, April, May, June, 10 months. Remember, don't be shy to use your fingers. It helps calculate these months. So we know that we had it for 10 of the 12 months, so that gives us depreciation of 875. Our total depreciation for the year is 13,708. What's left is to calculate our carrying amount at the end of the year. The cost price is our beginning cost price of 156,000 less our disposed cost price. If you remember, that's the cost price of the tires that we replaced, plus the cost of the canopy and the cost of the new tires that we got. This gives us a cost of 182,000. We also need to calculate the accumulated depreciation. The accumulated depreciation at the beginning of the year was 18,500 plus the depreciation for the year, and again less the accumulated depreciation of the disposed assets, in this case the accumulated depreciation of the tires disposed, which was 4,500. Now that we've completed the vehicles column, let's look at the machinery column. What additions and disposals took place? Additions. If we look at note 2, we are told that 3 new washing machines were purchased on the 1st of October 2012 at the cost of 12,000 rand each. We are also told that there were installation costs which totaled 1,500. Remember, that's very important. It's not 1,500 per washing machine, it's 1,500 in total. Therefore, the purchased washing machines, the cost of those purchased washing machines was 37,500. We are also told about the exchange, which we calculated in part B. It was the 50,000 fair value and the additional cost of 7,000, which gave us the cost of 57,000. And then also from part B, you'll remember that we upgraded a tumble dryer with a cost of 10,000, which is also an addition. So our additions for the year are 104,500. What disposals took place? If we've exchanged an asset, we've given an asset away. This is a disposal, and the cost of that disposal is at the carrying amount. To calculate the carrying amount, you'd simply take the cost at the date of exchange less the accumulated at the date of exchange, and we are given this in note 3. So therefore the disposal for the year amounts to 12,000. Now we need to calculate the depreciation. We have depreciation on the dry cleaner, which was exchanged. We received a dry cleaner of 57,000 less the residual value of 4,000 over estimated useful life of 15 years, and the exchange took place on the 1st of October 2012. So if we calculate our months, we'll get 9 months of depreciation on the dry cleaner, which amounts to 2,650. We also need to calculate the depreciation on our washing machines. We had 85,000 rands worth of washing machines on the 1st of July till the 1st of October. So that, to calculate that, is 85,000 times by our depreciation rate of 25% for 3 months, July, August and September. That gives us depreciation of 5,312. Then we have depreciation of 65,000, which is the 85,000 less the 2 washing machines, that the cost of the 2 washing machines that we gave away, the 20,000, gives us the 65,000 plus the additional 3 washing machines we acquired, which amounts to 37,500 times by a depreciation rate of 25%, also for 9 months from the 1st of October 2012. This amounts to 19,219. Lastly, we need to calculate the depreciation for the tumble dryers. We had 60,000 rands worth of tumble dryers with the estimated useful life of 4 years up until the 31st of December, and so we multiply that by 6 over 12, and that gives us 7,500. We then have 40,000 rand for the estimated useful life of 4 years times by 6 over 12 for the remaining 6 months, the 6 over 12. Then the one tumble dryer was upgraded, and we need to calculate that upgrade as the 20,000 cost price less the accumulated depreciation up until the date of upgrade, which is 7,500, plus the cost of the upgrade. This can all be seen in note 6, which is 10,000, and that gives us our new carrying amount over the remaining estimated useful life, which is now 3 years, times by 6 over 12, as the date is the 31st of December. We need to calculate the depreciation up until June, which is 6 months. If calculated, this amount equals 3,750. Our depreciation for machinery is therefore the sum of all these amounts, and this amounts to 43,431. Lastly, we are left to calculate the cost price and the accumulated depreciation and carrying amount at the end of the year. To calculate the cost price, we take the opening cost price of 145 less any disposals, and we know we exchanged an asset, the cost price of which was 20,000, so that needs to be subtracted off our cost. And then we've also had additions during the year of 104,500, which we add, and we get the cost price of 229,500 at the end of the year. The accumulated depreciation, we take the balance at the beginning of the year, 65,000 less any disposed accumulated depreciation, which we are told was 8,000 when we exchanged the 2 washing machines, and then we add any depreciation for the year, which we've calculated as 43,431, and this gives us our total end accumulated depreciation balance of 100,431 Rand. Our carrying amount is therefore 129,069. Please practice. Guys, we've reached the end of this question. You need to practice doing this. Speed will be a big factor for completing any PPE question, and although we understand that many of you know what's happening regarding the theory, you know how to deal with an exchange, you know how to deal with component accounting as well as dealing with upgrades, you need to practice doing it within the allocated amount of time. So best of luck for your studies. Please study hard and remember to practice. Till later. Bye.